Assalamualaikum warahmatullahi wabarakatuh. My name is Islamic binti Asri. My matrix number is 1232466. The definition of Takaful in Islamic finance. Takaful is known as one of the wealth instruments that based on cooperation to provide coverage or Takaful benefit in the event of misfortunes. It is based on the principle of cooperation and mutual assistance. The word Takaful comes from the Arabic word kafala, which means mutual guarantee. In Takaful, certificate holders pool their funds together to help each other in times of need. This is done through a Takaful operator which manages the fund and pays out Takaful benefits when they arise. The Takaful operator charges a fee for its service which is deducted from the contributions made by the certificate holders. Takaful operates on the principles of cooperation, mutual assistance, and shared responsibility. The contributions paid by the certificate holders are based on the concept of tabarruk. What is tabarruk in Takaful? Tabarruk means donation that the certificate holders willingly relinquish in order to help and provide assistance to other participants in need. Certificate holders voluntarily contribute to the Takaful fund, which is then used to pay benefits to those who suffer a loss. Next, the objective of Takaful in Islamic finance. Firstly is to ensure relevance. A bank product portfolio based on customer preference relevance. For example, medical and health covers the cost of private medical treatment such as the cost of hospitalization and healthcare if participant is diagnosed with certain illness or met with an accident. Next, facilitate access. Better usage of on infrastructure access. For example, more than 130 branches in strategic areas which cover both urban and rural areas. Third is enhanced protection, market conduct guidelines or directives. For example, guidelines or prohibitions against unfair practices in Takaful business. Takaful from the perspective of its stakeholders. First is consumers. It's to fulfill the demand for a number of protections and savings products at comparable cost to the conventional insurance products. Second, operators. It is able to utilize their skills and knowledge to manage and administer the Takaful scheme with a competitive remuneration package. Third, government. Establish Takaful as an alternative to conventional insurance within the comprehensive Islamic financial system. Fourth is investors or shareholders to provide reasonable returns on their investment comparable to conventional insurers. Besides that, frameworks of Takaful in Islamic finance. First is Mudarabah, profit sharing model. The Takaful operator acts as a mudarib entrepreneur and the participants as Rabumal capital providers. The contract specifies how the surplus from the Takaful operators is to be shared between the Takaful operator and the participants. Next is Wakala. The Wakala concept is essentially an agent-principal relationship where the Takaful operates as an agent on behalf of the participants and earns a fee for services rendered. The fee can be a fixed amount or based on an agreed ratio of investment profit or surplus of the Takaful fund. Other than that, the independency of market players. First is Takaful. Takaful operators, banks, and capital market players continuously focus on product bundling to offer more attractive products that fulfill the differentiated needs. Next is banks. Takaful operators provide Islamic protection and coverage for Islamic financing products offered by the Islamic banks. Next is capital market. Takaful operators are supporting the Islamic capital market through the active participation in subscribing to financial Islamic instruments which fulfill the medium to long-term financing needs. Apart from that, the key difference between Takaful and conventional insurance. First is Takaful. Policy holders cooperate among themselves for their common good. Next is every policy holder pays a part of the contribution as a donation to help those that need assistance. Second is conventional insurance. Conventional insurance involves the elements of excessive uncertainty borrower in the contract of insurance, gambling, miser as the consequences of the presence of excessive uncertainty that rely on future outcome. So the summary of the Takaful in Islamic finance is the Takaful sector has emerged as an important component of the financial system and has successfully integrated with the other components of the Islamic financial system. The conducive environment through the provision of a sound legal, regulatory and Sharia framework will continue to facilitate the industry in sustaining its rapid growth.